Welcome back. You're still with us on Markets Today. Well, let's run you through the rest of the headlines that we're tracking for you. The fourth headline today, Yes Bank was up in early trade after the bank plans to sell stressed assets worth 48,000 crores to JC Flowers ARC. Abhishek Kothari, he's tracking that. He joins us to fill us in with more on that front. Abhishek?
Yes Bank to sell identified stress worth about 48,000 crore to JC Flower ARC. So this will be in the structure of 15 to 85, that is 15% cash and 85% SR, that is security receipts. Recoveries in FY23 or till 30th November 2022 will be adjusted to the stress assets which are being sold. Talking about stress assets, let's take a look at Yes Bank's different stress assets. Gross NPA at about 27,400 crore. Restructured book close to about 6,000 crore, and write-offs over the last 8 to 9 quarters have been more than 25,000 crore. So these are the stress assets which could get sold to the ARC. View is that this will clean up the balance sheet, this will free up the capital, so they will have capital for growth, and stress in the balance sheet will reduce. So positive for them. Back to you.
Got that. Thanks for that, Abhishek. Well, UTI Asset Management Company surged nearly 10% in trade after a report suggested that the Tata Group is looking to buy a majority stake in UTI AMC from 4 state-owned financial entities. Surbhi joins us to fill us in with more on that. Surbhi?
Hi, thanks for that. So UTI AMC has been surging in trade today, and that is because the report suggests that Tata Group is in final talks to buy a majority stake in UTI AMC from 4 state-owned financial entities. PNB, LIC, SBI and Bank of Baroda together own close to 45% stake in the company. The reports also suggest that the final agreement is being sought on deal valuation and internal approvals have been secured. Tata has also received in-principle nod from T. Rowe Price Group, which owns close to 23% stake in the company. If this deal goes through, the combined firm will be the 4th largest AMC in India. These reports have not been independently verified by CNBC-TV18.
Okay, thanks for that, Surbhi. Well, moving on to some IPO news then. Investor solutions provider KFin Technologies IPO has opened up for subscription today. The management told CNBC-TV18 that the SIP market share has increased 42% and the long-term EBITDA margins will be in the range of around 42 to 45%. Let's hear them out.
We have seen market share gains from about 26% to 35% in the case of equity. Okay. We have seen a SIP market share increasing close to 42%. So we've been range bound, 40 to 45% in the past, right? And we'd like to believe that anything beyond that, if we could accomplish, we would love to plow back in terms of additional, modes for creation for the future. International for the period ending September was about 13%, right? And we have made certain acquisitions, not just managing the investor solutions, but also for fund accounting and administration, which also has international presence. We'd like to believe that, over time, we will be present not just in Southeast Asia, but, hopefully in the US and European markets as well. And we want to orchestrate a revenue pool of probably about 20% in the near term in terms of the overall pool, even as it expands.
All right, moving to the 5th headline today, the pharma sector was in focus with a number of stocks buzzing on the back of news flow. Ekta joins us to run us through a quick roundup of all the pharma action. Ekta?
Well, yes, I'll start with Sun Pharma, which is in focus because they did inform the exchanges that they have received the US FDA warning letter for their Halol facility. Now, remember, this is a part of the process of receiving an import alert, which they had already informed investors about around 2 weeks ago. Remember that the Halol facility was placed under import alert on the 8th of December 2022. That basically implies that all future shipments of products manufactured at the facility are subject to refusal of admission in the US unless the US FDA is satisfied with the remediation which is undertaken by the company at the Halol plant. The US FDA has also excluded 14 products from the import alert, which is subject to certain conditions. And remember that the supplies from the Halol facility were around 3% of total sales. With these 14 products being excluded, the financial impact is expected to be less. Alembic is in focus because the US FDA issued 5 observations to their Jarod facility. They have said that these observations observations are procedural in nature. Dr. Reddy is in focus in today's trading session because they have said that they completed the phase 1 study of DRLTC, which is basically the biosimilar tocilizumab, which is used for arthritis. They said the phase 1 study basically indicated similarity with the reference products in Europe as well as in US. They will be conducting global phase 3 trials now. Lastly, Shilpa Medicare has launched a cancer drug in the Indian markets. It is of a higher dosage and it is expected to disperse into water within 90 seconds and is expected to possibly be more beneficial for patients. The street will watch out for how effectively the sales take off for this particular drug. The company has said that they will look at launching this particular drug in other markets as well.
Thanks a lot, Ekta, for that dose of pharma. Well, moving on to specialty restaurants then. It zoomed close to around 14% after news that the board is set to consider a fundraise plan on Wednesday. Mangalam is standing by to run us through with more details on that. Mangalam?
Well, that's right. Specialty restaurants actually is in focus today, was doing well in trade, and that's primarily on account of the fact that they've announced that they will raise funds on, or they will mull fundraising via a board meeting on December 21st. It could be raise of issuance of equity, or it could also be, raising convertible instruments for the company. The big question here, however, is that it's a debt-free company and it hasn't raised funds in a while. So what is this fundraise for? Is it a financial investor who's come in, or is it a strategic investor? The stock has been a star performer this year, up almost 157%. And remember, if you just take a look at the fundamentals, they've marked a turnaround over the last couple of years as well. So the company's revenues over the last few years, pre-pandemic, would be between 300 to 350 odd crores, then took a big dip during the pandemic years of FY21 and 22 as well. But then in FY23, the first half itself, they've done about 180 odd crores. You double that and you would see the company reporting the highest ever revenues if the second half, as the case is for these companies, beats the first half itself. But importantly, it's the profitability where the company has shown a marked improvement. In fact, FY22 was the first year in the last many where the company actually broke into profits. The second half of the year did extremely well for them. And in the first half of this year itself, they've done nearly 3 times the profit that they've done in the entire FY22 itself. So things are looking strong. What are the drivers for them? The biggest one, of course, is the fact that they've entered, more return accretive businesses like cloud kitchens, etc. And ancillary revenues have been accruing to the company. Secondly, they've also optimized a lot of their costs during the COVID period, and they have sustained that during post-COVID as well. And finally, rationalization of stores and not expanding, indiscriminately is something that has helped them too. Now the bigger question, what are the funds going to be used for? Will it be financial, or is there some strategic interest in the company?
Okay, all right, Mangalam, thanks for that. Well, Phoenix Mills, that was up in trade today after news that the company has announced an acquisition of 7-acre land parcel in Surat. Sonal Bhutra joins us to fill us in with more on that. Sonal?
That's right, Phoenix Mills is in focus because the company has gone ahead and acquired a land in the city of Surat, which measures around 7.22 acres, and the total consideration for this is 510 crore rupees. Land is acquired via Thot Mall and Commercial Real Estate, which is an indirect subsidiary of the company, and this is the subsidiary which will go ahead and develop the retail asset. It will be a leasable area of 1 million square feet, and the retail development will complete by FY27. So it will give an expectation of the kind of cash flows that can start coming in the books of the company from FY27. Crore Institutional Equity says that Surat helps further expand the geographical presence of Phoenix Mills. The acquisition of Surat land parcel lends further visibility for growth of the company. And this asset is the second asset that they are creating in the state of Gujarat. The first one was Phoenix Palladium in Ahmedabad, which is likely to be commissioned very soon. They have a ad rating on the stock with a target price of 1,640 rupees per share.
Well, thanks for that. Well, JSW Infra is likely to launch an IPO by May of next year. Sources say that the company is looking to file the IPO DRHP with the market regulator by Jan or Feb of 2023. Yash Jain, well, he's on top of that one. He joins us to fill us in with more on that front. Yash?
Well, as far as JSW Infra is concerned, the company counts itself as one of the top 5 port companies in the country. And what we've been given to understand is that JSW Infra has appointed JM Financial as the lead banker to its IPO. The company is in the process of appointing more investment bankers as far as that IPO is concerned. Importantly, on the timeline, what sources tell us is that JSW Infra is looking to file the IPO DRHP with SEBI by February of 2023 and then eventually launch its IPO by May of 2023. The size of the fundraising, that's quite significant. Sources tell us that JSW Infra is looking to raise about 3,000 crore rupees through this issue. Now, as far as that 3,000 crore amount is concerned, that will entail an equity dilution of about 10%, which a simple calculation will tell you that the company expects to get value through this IPO at about 30,000 crore rupees. As far as the IPO itself is concerned, it's a complete fresh issue, which means that 3,000 crore rupees, which the company is looking at raising, comes into the company for its expansion. We've written to the company, that is JSW Infra. A response from the company is still awaited.
All right, Yash, thanks for that. But on that note, we have run out of time on this edition of Markets Today. Thanks so much for watching.